This presentation is designed to help you prepare for the MLO SAFE Test, a key exam for mortgage loan officers. We will walk through the essential topics, tips, and strategies to ensure you're well equipped to pass the exam with confidence. Whether you are new to the industry or looking to brush up on your knowledge, this guide will provide valuable insights and resources to help you succeed. Let's dive into the core concepts and important details of the MLO SAFE Test. Alright, let's talk about application information and requirements. When applying for a loan, it's really important for borrowers to provide accurate and truthful information. This is not just a matter of trust, it's legally required. The borrower must submit all the necessary supporting documents to back up the details they provide. Now, let's go through the key forms you'll encounter. First up, we have URLA, Form 1003, which stands for the Uniform Residential Loan Application. This is the standard application for residential loans. Next, there's a SPAP, Form 1004, which deals with appraisal standards and ensures that property appraisals meet professional guidelines. You'll also need to fill out VOE, Form 1005, for verification of employment, and VOD, Form 1006, for verification of deposit, which are used to verify your job and the money you have in the bank. Similarly, VOR, Form 1007, is for verification of rent, proving where you've lived and your rental history. Then, there's the Transmittal Summary, Form 1008, which is a summary of your mortgage loan data. This includes key financial information like your debt-to-income ratio and total liabilities. And finally, if you're applying for a reverse mortgage, you'll need Form 1009. Now, let's talk about the complete application, and this relates to the TILA, Truth in Lending Act, and Regulation Z, which were introduced in 1968. These regulations are there to make sure lenders give borrowers clear and detailed information about the cost of loans. For a complete application, you'll need to provide several important pieces of information. First, the property address you're buying or refinancing. Then, the estimated value of the property. You'll also need to specify the loan amount you're requesting. Of course, the lender will need your name and Social Security number, SSN, as well as income details to assess your ability to repay the loan. Now, let's dive deeper into the Uniform Residential Loan Application, URLA. This form is often referred to as Form 1003, and it's the key application used by Fannie Mae, the government-sponsored entity that buys mortgages. If you're dealing with Freddie Mac, the application is Form 65, but it's quite similar to the URLA. If you're applying jointly, say as a married couple, both borrowers will fill out this form together. But, if the borrowers aren't married, so, more like co-mortgagors, each person will need to fill out a separate Form 1003. Alright, moving on to disclosure requirements. These disclosures need to happen within 3 business days after you submit your application. There are a few important documents you'll receive here. First, the Home Loan Toolkit, specifically for purchases. This is part of the Know Before You Owe initiative, designed to give borrowers a clear understanding of the process. Then, there's the Special Information Booklet, which is a requirement for things like reverse mortgages, HELOCs, home equity lines of credit, or loans secured by a mobile home. You'll also receive a loan estimate for purchases, or a good faith estimate, or GFE, for reverse mortgages, HELOCs, and mobile homes. This document gives you an estimate of the loan terms, interest rate, and fees. Along with that, you'll get the Mortgage Servicing Disclosure Statement, which is part of RESPA, Real Estate Settlement Procedures Act. It tells you about the company that will manage your loan after it's closed. And lastly, you'll also get a list of HUD-approved counselors if you need housing counseling. Next up, disclosure before loan service/consumption starts. Under RESPA, there's a rule about AFBA, Affiliated Business Arrangement, and it comes with a 1% threshold. If there's a situation where a lender has an affiliation with another business that might affect the loan, they need to disclose that to you upfront. Then, under TILA, Truth in Lending Act, there's a requirement for a closing disclosure. You'll receive this 3 days before closing, and it gives a detailed breakdown of your loan, including interest rates, fees, and all terms. Now let's talk about the disclosure at loan settlement. After you've closed the loan, you'll get an initial escrow statement within 45 days. This document is part of the RESPA rules, and it tells you how much money you've paid into your escrow account, which is used to cover things like property taxes and homeowners insurance. Lastly, let's go over the disclosure after loan consumption. After your loan is in place, you'll receive an annual escrow statement every year. This is part of the RESPA regulations, and it lets you know the status of your escrow account, including whether there are any shortages or overages. Another key disclosure is the servicing transfer statement. If your loan servicer changes, you'll be notified 15 days before the transfer. And if you're making late payments, there's a 60-day grace period to avoid penalties. This is all designed to keep you informed about your loan and its management. Congratulations on taking the next step toward becoming a certified mortgage loan officer. We hope this study guide has provided clarity and a solid foundation for your exam preparation. Remember, success comes with dedication and practice. Stay focused, keep reviewing, and you'll be well on your way to passing the MLO SAFE test. Good luck with your studies, and feel free to reach out if you have any further questions or need additional resources. Stay confident, and you've got this.